In breaking U.S. news, a major shift in crypto policy just hit. Former President Donald Trump has signed an executive order aimed at protecting Bitcoin and crypto businesses from being debanked. The order bans banks from denying services based on political views, religion, or lawful business activity, and that includes crypto. This effectively kills off any repeat of Operation Choke Point 2.0, where institutions quietly cut off access to crypto firms under regulatory pressure. This is a big win for financial freedom, and if enforced, it could open the floodgates for banks to re-engage with the crypto sector at scale. Expect political crypto narratives to heat up fast as we move closer to the U.S. election. We've just had one of the most quietly powerful moves for Bitcoin on the institutional front, and barely anyone's talking about it. President Trump has officially nominated economist Stephen Miran to the Federal Reserve Board. Now, on paper, that might sound like just another appointment. But Miran isn't your typical Fed pick. He's a pro-Bitcoin voice, someone who's publicly supported Bitcoin as a hedge against inflation and a monetary alternative outside the traditional system. This means we now have a Bitcoin-friendly policymaker sitting inside the Fed, the very institution that influences interest rates, liquidity conditions, and the flow of capital globally. What does that signal? It means the crypto conversation isn't just happening on Twitter anymore, it's happening inside the most powerful financial boardrooms in the world. And with Miran at the table, Bitcoin finally has a seat too. Meta just dropped the hammer on one of the biggest crypto scam networks operating through WhatsApp. Over 6.8 million accounts have been shut down, part of a sweeping crackdown on what's known as pig butchering scams. If you haven't heard that term before, here's how it works. Scammers build fake trust over days or weeks, pretending to be mentors, traders, even romantic partners, and then they hit victims with slick-looking crypto investment traps. These aren't random spam bots, they're coordinated fraud rings, and they've been particularly active in Southeast Asia. Meta's new AI filters now block entire conversation patterns tied to these scams before they ever reach the victim. For the crypto space, this is a big move. It's a rare example of big tech actually reducing fraud risk, not adding to it. The takeaway? Security is finally catching up to adoption. But keep your guard up. Social engineering remains one of the top ways people lose funds in crypto. Trouble is brewing in Southeast Asia. The Philippine SEC has officially flagged OKX, Bybit, and KuCoin for operating without a CASP license under the country's new crypto regulations. As of the 5th of July, these platforms are now considered unregistered and illegal for local users. That means any exchange activity, even just holding assets, could put users at risk of penalties or forced withdrawal. This is part of the Philippines' broader push to tighten control over crypto platforms through CASP licensing. That's Crypto Asset Service Provider certification. Sanctions are reportedly incoming, and other offshore exchanges could be next. If you're trading from the Philippines, or have users or audience members based there, this is not a drill. Platforms flagged under this rule are now off limits until licensed. Expect similar moves in other emerging markets as regulators move from wait and see to enforcement mode. This one's a bit of a head-scratcher. China is reportedly preparing to launch its own national crypto stablecoin, even after doubling down on its domestic crypto ban. Strange, right? On one hand, the country has banned Bitcoin mining, crypto exchanges, and trading apps. On the other, it's now rolling out a state-backed digital asset, just not the decentralized kind. This move fits a growing global pattern. Governments want the tech behind crypto, but not the freedom. They're adopting blockchain to issue programmable money they can control while cracking down on open protocols like Bitcoin and Ethereum. In China's case, the stablecoin would likely be integrated into the digital yuan infrastructure, reinforcing surveillance and central bank oversight. So, while it's called crypto, don't get it twisted. This isn't about decentralization or financial freedom. It's about control dressed in blockchain, clothing. Dubai just took another step toward becoming a global crypto hub. Nomura's crypto arm, Laser Digital, has secured a full Vera license to offer institutional-grade crypto derivatives, including OTC options. This is big. It gives hedge funds, asset managers, and other professional clients regulated compliant access to crypto options, something most major jurisdictions still haven't figured out. Until now, most institutional crypto exposure was limited to spot and futures. Options have remained a gray area in many markets. With this license, Dubai just gave the green light and signaled that derivatives are the next frontier for institutional crypto finance. It's a win for legitimacy, for liquidity, and for asset managers who want exposure without jumping regulatory hurdles. And more importantly, it shows the global shift in capital from anti-crypto policies in the West to open doors in markets like the UAE. And that wraps up this week's biggest headlines. From governments moving into Bitcoin to Meta cleaning up scams and institutional demand heating up, one thing's clear: crypto isn't slowing down, and neither should your trading. While the market shifts, legends are already ahead of the move. You saw the setup, you saw the execution, you saw the results. These aren't just lucky trades. They're the result of structure, clarity, and a team that guides you through every step. So, if you're done trading blind and ready to follow clean, real-time plans across Bitcoin, altcoins, and even indices like SPX, click the Telegram link in the description and join the Legends community today.